with Chapter 12 talking about money and financial institutions. Section 12.1 is on money and banking. We are going to describe the functions and characteristics of money and discuss the three main functions of a bank. The purpose of money. Money enables people and businesses to buy and sell goods and services more easily around the world. Money is a standard of value and a means of exchange or payment. It can be anything that people accept as a standard of payment. In the past, people used shells, stones, corn, parrot feathers, and even gopher tails for money. Modern society, however, uses coins, currency, checks, and debit cards as part of the monetary system. Goods and services are directly exchanged using money. The seller of the goods and services can then take that money and exchange it for other goods and services. The functions of money. Whether you buy a soda or sell a corporation, money changes hands. Without money, people would be forced to barter or trade goods or services directly for other goods or services. Bartering can be a difficult method of exchange. Suppose you have grown a bushel of tomatoes. You would like to trade the tomatoes for new sneakers. In the barter system, you would have to find someone willing to accept tomatoes for sneakers. You would also have a hard time figuring out the value of the sneakers in relation to the tomatoes. You might have to make several trades to acquire something the sneaker owner would accept. Money has three basic functions. It's a medium of exchange. Medium of exchange is anything that is generally accepted as a measure of value and of wealth. In a system that uses money, buyers and sellers agree to exchange money. Money functions as a standard of value. A standard is a way to measure the weight, amount, size, or value of something. Money provides a means of measuring the value of goods and services. And lastly, money functions as a store of value. That means it holds its value over time and can be stored or saved. Money that is saved can build wealth. Paper money and coins are common forms of money. For money to carry out its functions, it must have these characteristics. Money must be stable in value. Money that is stable has little, if any, change in value. To be used as money, an item must be scarce. If the supply of an item is overly plentiful, it loses its value and cannot serve as money or a store of value since it would have little worth. People would lose faith in its value as a medium of exchange. Money must be accepted. People have to be willing to take money in exchange for goods and services. It should be divisible into parts. Money also has to be portable and durable. And finally, it must be hard to counterfeit. Counterfeit means to make a copy of something in order to defraud or deceive people. A financial institution is a firm that manages money. Banks are the main types of financial institutions. Banks offer a variety of financial services. They help other businesses and consumers manage their money. They have three main purposes: storing money, transferring money, lending money. And we also have other financial services. One of the main services banks provide is storing money in bank accounts. To store money means to place or leave it for preservation or later use. A bank account is a record of the amount of money a customer has deposited into or withdrawn from a bank. The money put into a bank account is called a deposit. The money taken out is called a withdrawal. Keeping your money in a bank prevents you from losing it, spending it, or having it stolen easily. The two main types of bank accounts are checking accounts and savings accounts. Checking accounts are used for storing money in the short term. Banks usually charge a fee for checking accounts. Savings accounts are used for storing money over a longer period of time. An advantage of a savings account is that it earns more interest than most checking accounts. Interest is a rate that the bank pays customers for keeping their money. Banks use checks and electronic fund transfers to move money. Checks are primarily used to transfer money from one party to another. Electronic funds transfers, or EFT, allow money to be transferred from one bank account to another through a network of computers. Direct deposit is the electronic transfer of a payment directly from the payer's bank account to that of the party being paid. Many employers issue payroll checks this way. Lending money. Lending money is the primary way banks generate profits. The money you deposit in a bank makes it possible for the bank to lend money to other customers. Just as banks pay customers interest on their savings, customers pay interest on the money they borrow from banks. Banks then use the interest they earned to pay interest on customers' savings accounts. Most banks require some form of collateral. Collateral is a property or goods pledged by a borrower to use as security against a loan if it is not repaid. There are four main types of loans that banks offer to businesses and individuals. A mortgage loan is a loan used to buy real estate, such as a house or an office building. A mortgage is an agreement in which the borrower gives a lender the right to take the property if the loan is not repaid. A commercial loan is a loan made to businesses to buy supplies and equipment. An individual loan is a loan made to an individual to pay for personal items, such as a car, home repairs, or a vacation. And lastly, a line of credit is a credit arrangement in which a financial institution agrees to lend a specific amount of money to be used at any time for any purpose. Banks also offer other services. Many provide financial advice on managing and investing money. Banks not only store money, but they can also store valuable items such as jewelry and birth certificates in a safe deposit box. A safe deposit box is a secure box in a bank's vault used for the safe storage of a customer's valuables. As another service, many banks offer debit cards and credit cards such as MasterCard or Visa. Banks also have trust departments that manage money for individuals or organizations.